Taco, we're nearing December, and December is all about the festive season. And what do you do in the festive season? Well, normally you eat, but you also have a drink. And today we want to talk about two major players in the brewing and beverage sector. And in this case, we first want to start with the French company, Rémy Cointreau. You're going to talk, because you like that, you like to talk about options. You're very good at explaining options to clients. So you're going to talk about a new strategy that we haven't talked about before, buying the call option with these two companies. So Remy Cointreau is one of the largest cognac producers in the world, to say so. They're from France. They came out with figures this week, but most importantly, the shares responded quite heavily on the news that Donald Trump was gonna impose higher tariffs on goods from outside of the US. The company was a little bit under tension. Also, the workers were on strike because they were afraid that maybe the company would move the bottling business straight away to the US and towards China. So to avoid those tariffs, the company would fire the people in France and move the business elsewhere to avoid those tariffs. At this moment, the company said they will not do that, and they are prepared to mitigate and hedge the possible risk that come from these imposed tariffs. All in all, the figures on itself were not really good, and despite the fact that they were not so good, the shares were up 4.9% yesterday. The stock was trading around 60 euros.
Yep.
For the year to March 2025, the producer of the Remy Cognac reported a sales decline of 15%, which is of course not very, very positive. It previously said that they will not have a double-digit decline, so that the amount of less sales that they would present to the market would be like between 1 and 9, to say it's like that. But unfortunately, it was between 15 and 18%. Looking at this company, I think it's a company that of course you have to say, do you want to invest in alcohol? Do you want to invest in these beverages? But the company in itself is pretty interesting. They pay 3.5% of dividend on a yearly basis. The price earnings is not extremely expensive if you compare it to like tech companies where you're paying 25 plus times the earnings. In this case, you're paying 15 times the earnings. And also, if you look at the price to book ratio, it's pretty solid. You're talking about a price to book of around 1.5. Normally, everything below 1 means that you're buying a competitive stock. So I think all in all, Remy Cointreau is having some difficulties. They are one of the largest cognac producers. That's their core business. In the sector, cognac is of course a beverage that you can drink, but it's also used for like a lot of chefs and meals and stuff. So, and the world is very big, so they have a really big offset market. 92 million euros of profit they make, so they are very profitable. It's not like they're in losses, and the expectations are also that this year and the next year their earnings will be slightly lower. So at this moment they're around 4 euros per share. Next year will be slightly lower, but the expectations is that by 2028 that will be back at the level where we are now. So not like a really big growth stock, but like a solid element in a portfolio where you generate dividends and have some peace of mind. I think that's what this stock is about, because the earnings will not grow tremendously. Then Heineken, our Dutch brewer, they presented pretty interesting news. They were going to build, by the end of 2005, they're going to start in Dubai. They're going to start building a huge brewery together with Dubai's state-linked maritime mercantile. It's the first off the grid brewery in that area, so there's no breweries there. You see that the sales of alcohol and beverages have been smoothened up. It's easier now to get booze in those countries. I mean, if you look at Dubai, and there's 17 million tourists on an annual basis, and by general, when you're going on holidays, you like to have a little beer. The local beer there is Sirocco. It's also partly owned by Heineken. And the tourists, they come mainly from Europe, of course, Russia, and also a lot of people from India are visiting that country. Looking at Heineken from a fundamental perspective, a little bit more expensive, and not expensive because you're paying 70 euros as well for the stock, but more expensive, paying 37 times the earnings. So the stock is, at this moment, maybe a little bit undervalued, to say so, because if you look at the expectations, so the price earnings for this year, the earnings per share, are 4.6. But the expectation for 2028 is that will be going towards 8. So in that case, you'll be paying like 9 times the earnings. So all in all, I think Heineken, there might be some music in the stock towards the future. The dividend is 2.5%. Price to book ratio a little bit higher, around 2. So it's not extremely cheap. They need to get those earnings in to get those figures up. So I think those are two companies. I think we talked about them before, because we're doing the market reports already for many years. But it's nice to have a recap about those stocks. Rémy Cointreau, difficult situation with possibly imposed, a little bit uncertain with what Trump is going to do, and also of course China. Heineken, they're keep building on the future by setting up a new factory in a completely. And it's also funny that, of course, again, the Dutch were the first brewery in that area.
Okay.
Taco. So if you want to do something with it, you can buy the shares, but you can also.
Yeah, you can also buy a call option, and that's actually the last possibility from the 4 ways of investing with options, the option matrix. The first time I remember you and Casper spoke about what to do in high markets, for the US, for example, which is actually still trading very high, but how you can use options. And we spoke about selling a call and buying a put. It was a combination, but at least we discussed both individual methods. Mm-hmm. Later we discussed selling a put. So after selling your shares, you can actually take the obligation to buy them back. And the last one, there's one missing, is buying a call option. And you have the right to buy the underlying value. It can be done with these shares, but of course also with other shares and with ETFs. We're not going to explain all the details because that would be too much information. Of course, I like to refer to our online courses where you can see everything for beginners and for the more experienced investor. And if you don't understand everything, you should not invest in it. It's complex. Yeah. It's our complex products. It's not difficult, I think, but the product is totally different than just buying a share. Yeah. But very interesting. So 2 ways of using the call option we have more or less defined. One is purely for speculation, what a lot of starting investors, I think, like, because you have a very low investment and you have an unlimited potential. Yeah. That sounds good, but normally it's too good to be true. Yeah. And let's have a look at the 2 companies Martin discussed. For example, Rémy Cointreau, trading around 60. You can buy, for example, a call option 80 with an expiry date in March next year. So if it would go to 100, so everything would be okay, then with only €1, that's the premium, the option will have a value of 20. So with €1, you can make 20 euros. Well, that's a leverage. It's, of course, extremely good, and that sounds interesting. But on the other hand, if it goes up from 60 to 70, or it will go up the second part of next year, all those situations, you just lost €1. And if you lose 10 times €1, it's also a lot of money. So it is interesting. Maybe sometimes you can do something or in a combination with a out of the money call option like this one. But in general, it's very difficult to be structurally successful. The other way, the second way of using the call option is buying an in the money call. And for example, Heineken trading around 70 yesterday, you can buy, for example, the call option with a strike price of 50 and expiry date June next year. So the price would be around €21. So it's
at this moment,
quite a big investment. But on the other hand, it's not the 70. So you have a lower risk, a lower investment, and later I will show also a lower risk. If Heineken would also go up to 100, then this right to buy at 50 would have a value of 50. So actually, you made €29 profit with that call option, where of course the share itself from 70 to 100 would have a profit of 30. So it's similar in the case, but also if it would be 90, it's almost similar potential.
If the price stays at 70,
exactly,
then you don't lose so much.
You don't lose so much. If it will be 70, then the price of this call option 50 would have a value of 20. You paid 21, so you lost a little bit, but it's okay. Your vision was that the stock would go up, so you can accept it. Also important to know, you don't have the right for dividend. You mentioned the dividends, so having the stock would give you the right for dividend. Having the call options not. So that is maybe not too positive about the call. The third situation, however, if Heineken would trade 30 on the expiry date, then with the stock you would have lost €40. And it can happen. I mean, not specifically with Heineken, but I mean in general, there are examples of very good companies losing more than half of their value. Well, With the bought in the money call option, you lose only the invested premium of 21. And if it would go lower than 30, the difference would actually be bigger in favor of the call option. So there are quite some positive characteristics of an in the money call option. So to summarize, two ways of using the bought call option: for speculation out of the money, for normal investment in the money. You always have a lower investment than the stock itself, so meaning the risk is always lower. However, you don't have dividends, and you lose always a little bit of time value, sometimes a lot with an out of the money call, and sometimes just a little bit with an in the money call.
Yeah, I think it's a very good example on how to use these instruments. I mean, it's specifically if you buy an in the money call. I mean, if your vision is that the price will go up, you have this, you pay less, right? So you have the right to buy it for a lower price, and the option has a value,
Exactly.
which you're paying for. So it's not like you're paying more or less or whatever. So
Like for air. And we actually didn't discuss the possibility to sell the call option before the expiry date.
No.
That would be too complicated. This is all on the expiry date, but it might be even more interesting to just do it and after 1 week decide what to do. But that's for another time maybe.
well, thank you for watching again. We'll be with you again next week. Have a good weekend, and of course, give us your phone.
Thank you.